In today's dynamic and interconnected global economy, various economic indicators play a crucial role in understanding and predicting the financial landscape. One such key indicator is the U.S. Non-Farm Payrolls (NFP) report. The NFP report is a significant measure of employment trends in the United States, providing valuable insights into the health and performance of the nation's labor market. This video aims to explore the concept of US NFP, its importance, calculation methods, impact on financial markets, and its role in shaping monetary and fiscal policies. What is US NFP? The U.S. Non-Farm Payrolls (NFP) is a monthly report published by the U.S. Bureau of Labor Statistics. It measures the change in the number of employed people in the United States, excluding farm workers, private household employees, and nonprofit organization employees. The NFP report is based on data obtained through surveys conducted across various industries and sectors, making it a comprehensive representation of the U.S. labor market. Importance of US NFP. The US NFP report holds immense significance for economists, policymakers, investors, and traders worldwide. It provides valuable insights into the overall economic health of the United States, specifically focusing on employment trends. By analyzing the NFP figures, market participants can gauge the level of job creation, unemployment rates, wage growth, and labor force participation, all of which contribute to understanding the nation's economic growth trajectory. How is US NFP calculated? The US NFP report is derived from the Current Employment Statistics (CES) survey, which collects data from businesses and establishments across the country. The CES survey covers approximately 145,000 businesses and government agencies, representing about 697,000 individual worksites. The collected data is then used to estimate the number of jobs added or lost during the reporting period. The role of US NFP in the economy. The U.S. labor market is a key driver of economic activity and consumer spending. The NFP report plays a crucial role in shaping economic policies and business decisions. A strong NFP figure indicates a thriving labor market with increased job opportunities and higher consumer confidence. This, in turn, can stimulate consumer spending, leading to economic growth. Conversely, a weak NFP figure suggests a sluggish labor market, potentially leading to reduced consumer spending and slower economic expansion. Impact of US NFP on financial markets. The release of the US NFP report has a significant impact on financial markets worldwide. The figures provide insights into the current state of the U.S. economy, influencing investor sentiment and market expectations. Positive NFP data, indicating robust job growth, often leads to increased investor confidence, resulting in higher stock market valuations. Conversely, weaker than expected NFP figures can trigger market volatility and uncertainty, potentially leading to stock market declines. Factors influencing US NFP. Several factors influence the US NFP figures. Economic policies, business cycles, technological advancements, geopolitical events, and even natural disasters can impact job creation and employment trends. Changes in government regulations, fiscal stimulus packages, and monetary policies can also influence the overall employment landscape. It is crucial to consider these factors when interpreting NFP figures and making informed decisions. Historical significance of US NFP data. The US NFP report carries historical significance due to its impact on financial markets and economic policy decisions. Traders, investors, and economists often compare the current NFP figures with historical data to identify trends, patterns, and potential future scenarios. Long-term analysis of the NFP report can provide valuable insights into the economy's resilience, response to crises, and structural changes in the labor market. Interpreting US NFP figures. Interpreting US NFP figures requires a comprehensive analysis of various components. Besides the headline NFP number, it is essential to assess the unemployment rate, labor force participation rate, average hourly earnings, and revisions to previous data. These factors can provide a more nuanced understanding of the job market and its implications for economic growth. US NFP and monetary policy. The U.S. Federal Reserve closely monitors the NFP report when formulating monetary policy decisions. A strong NFP figure may indicate increased economic activity, potentially leading to inflationary pressures. In response, the Federal Reserve might consider tightening monetary policy by raising interest rates to curb inflation. Conversely, a weak NFP figure may lead to accommodative monetary policies, such as lowering interest rates to stimulate economic growth. US NFP and fiscal policy. The US NFP report also influences fiscal policy decisions. Governments may use the insights gained from the NFP figures to develop strategies aimed at job creation, workforce development, and economic stability. The data can inform policymakers regarding the allocation of resources, tax policies, and initiatives to promote employment growth. Relationship between US NFP and inflation. The relationship between US NFP and inflation is complex. Generally, a strong NFP figure suggests a robust labor market, which can lead to increased wages and consumer spending. Higher consumer spending, in turn, can contribute to increased demand for goods and services, potentially driving inflationary pressures. However, the overall impact of NFP figures on inflation is influenced by various factors, including productivity levels, global economic conditions, and the effectiveness of monetary policies. US NFP and consumer spending. The NFP report plays a crucial role in understanding consumer spending patterns. When job creation is strong and unemployment rates are low, individuals are more likely to have disposable income, leading to increased consumer spending. Positive NFP figures can boost consumer confidence, driving economic growth through higher sales and business revenues. Conversely, weak NFP figures may lead to reduced consumer spending, impacting businesses and overall economic activity. The NFP report release and market reactions. The release of the US NFP report triggers market reactions and volatility. Traders and investors closely monitor the figures, aiming to capitalize on market movements. The immediate market response to the NFP report release can influence currency exchange rates, stock market indices, bond yields, and commodity prices. It is crucial for market participants to stay updated on the release schedule and understand the potential impact on their investment portfolios. The U.S. Non-Farm Payrolls (NFP) report serves as a vital economic indicator, providing insights into employment trends and the overall health of the U.S. labor market. It influences financial markets, monetary and fiscal policies, and consumer spending patterns. By analyzing the NFP figures and understanding their implications, individuals, businesses, and policymakers can make informed decisions to navigate the ever-changing economic landscape.